Hello, everyone, and welcome to the Your Mark on the World show. I'm your host, Devin Thorpe, and we're producing this show for Forbes, where I am a contributor covering social entrepreneurship and impact investing. And today we have as our guest Rodrigo Nino, who is the CEO and founder of the Prodigy Network, a crowdfunding site for real estate projects and some dramatic, remarkable real estate projects at that. Rodrigo, welcome to the show. We're so glad to have you.
Thank you very much. I'm very happy to be here with you again.
Rodrigo, it's an exciting opportunity, I think, to chat about Title II of the Jobs Act. It is, as I pointed out in the article on Forbes, somewhat oxymoronic in that the very concept of the Title II is to allow for a public offering, a general solicitation of a private securities offering. It makes almost no sense, and yet it's a wonderful thing. Tell us a little bit about how you are using this new 506C Title II feature in raising money for your projects.
We essentially believe, that crowdfunding in real estate is a very simple yet fundamental thing. We believe, that it's all about the access in general. That's what crowdfunding provides, access. The key here is access to what? Because you can have access, to trailer parks in the middle of nowhere, and you can have access to buildings in commercial real estate assets in core metropolitan cities like New York. In 2007 and 2008, the ultra-high net worth individuals invested their capital in specific assets. They didn't invest it in REITs because the correlation with the stock market was huge. They wanted something decoupled from the stock market. So they chose specific cities, 10, out of which New York is the single most relevant one, and they bought commercial real estate in those buildings. Surprisingly so, back then, in 2007 and 2008, the smaller retail investor, accredited or not, didn't have access to participate in such protection for their own capital. So that just doesn't make any sense. That's what really Title II addressed for accredited investors in the U.S. Now, any accredited investor can be openly solicited to participate in one of these assets that were essentially, the royalty when it came to billionaires putting their money in a crisis such as the one we went through.
What kinds of investment minimums are you using for your offerings?
When we started over 12 months ago, we were raising equity in tranches of $250,000 just because we wanted to measure, the capacity that we had from an administrative standpoint. And as we increased that capacity, we brought it down to $100,000, and now we are at $50,000. And we're planning on bringing it down to $10,000 even. However, we're still capped under Title II, to accredited investors.
It is a wonderful opportunity to keep pushing that down because the population of accredited investors is not evenly distributed according to net worth, right? Most accredited investors are nearer the threshold, the minimum threshold for accreditation, right? Most barely qualify or a little more and are less likely to invest $50,000 or $250,000 in a deal. So do you see yourself pushing that, as a practical matter, pushing that limit down?
Absolutely, because, but you have two things here. One is the limit on the ticket, which is $10,000 right now. I think we're going to keep it there once we launch our new project at that price, because administratively speaking, it is still very resourceful. It consumes a lot of resources. I'm sorry.
Sure.
But from the other issue, is that we really believe that the cap on the offerings or the limit at $1 million on the offerings, we should get rid of that one, because that just doesn't make sense. I don't see how is it that we're protecting the unaccredited investor from by not letting them participate, in the large offerings that we have here in New York. How is anybody better suited investing in a property, in a small one, $1 million property, in their hometown, as opposed to put their dollars, in one of these massive buildings that we're doing over here. Everybody knows, because the real estate has been sitting there for 80 years, that the risk is much less in established markets such as Manhattan.
Yes. Now, again, though, as you think about that under Title III, as a practical matter, the limits will have to come down, because ordinary investors don't have the ability to put 10 grand a deal in. In fact, under the rules, most are not allowed to put that much into a deal. Do you anticipate having the systems in place to be able to drop those minimums?
Absolutely. Right now, as I was saying before, we intend to keep it at $10,000. But eventually, and as we move forward with the legislation, and we see those limits coming down on the offerings of $1 million, that cap, getting rid of that cap, we intend to bring it down consistently as well. However, I do believe, that there has to be some suitability assessment, as to who can invest and who can't. You don't want everybody putting all their life savings, into not only this investment, but any investment. This is a very strong way of diversifying your portfolio, because quite frankly, I believe in diversification. You shouldn't be invested in stocks, bonds, and equities. Stocks, bonds, and commodities only. And if you want to buy real estate, you shouldn't be secluded to buying a buy-to-rent condo somewhere, that you can't even afford it, that you cannot not even manage. Now you have access to commercial real estate, through this. But it's just a function of diversification and allocating proper percentage to this asset class, which, quite frankly, that's what it is. It's a whole new asset class.
Yeah, and it's an exciting opportunity, and really will change the landscape for ordinary investors as that opportunity genuinely becomes a reality in coming months. I want to talk about some of your projects that you've done in the past and the projects you're working on now, but you did the huge 66-story skyscraper in Bogota. That's still under construction, right? Tell us a little bit about that project, because that's really quite a remarkable story.
Thank you. Yeah, that project isn't really ours. It's from a third-party developer from Spain that invited us to do the crowdfunding for them. And we started in 2009, late 2009. And it is, I like to believe, the world record in crowdfunding, where we raised over $200 million with over 4,200 investors. That project is fully funded and well under construction. It will be still under construction for a couple of years, because obviously, as you point out, Devin, it's a massive 66-story building. In Colombia, we have another hotel that right now is operational, that we crowdfunded, and it opened its doors, and it's doing extremely well. Little over 4 months from opening, it's pretty stable already, but it normally takes 2 years to ramp up a project of these characteristics. And that happened because we have 1,100 local ambassadors of the property, that are the crowdfund investors, making sure that the food and beverage operation, is happening as they do every bar mitzvah or every party, in the property as well.
Sure.
And then we are doing an office building in Colombia as well that is under construction. And here in New York, we have over, I would say, $575 million of inventory in 3 projects that we have closed over the past 12 months. And the interesting part about that is that we have been integrating ourselves with traditional institutional financing really well. We have been funded in our 3 projects here in Manhattan by Deutsche Bank, providing us senior financing, traditional senior financing, by Bank of America and by CIBC from Canada too. And we also got, mezzanine financing from MS & Company, which is a pension fund institutional administrator. So in the end, the equity that we brought, which is common equity, there's no debt, is over $73 million. And this happened in less than a year. So you can assess by those numbers, why is it that investors from 17 countries and 10 different states now are participating in these assets? Everybody loves New York, and everybody wants a piece of it.
Sure. Tell us a little bit more about the building.
Okay, one building is AKA Wall Street, which is the first one we launched, operated by the Corman community's family. And they have their brand, AKA, which is an extended stay condo, 135 units, located in the financial district here in New York. The second property is 17 John, which is right next to the Fulton Station, one block of the World Trade Center as well. That one features 191 apartments, and we will have a collaborative workspace in the pedestal. It'll be probably 30,000 square feet, that will be accessed by the guests or owners in the condo project upstairs. And the third one is something that we recently closed, as recent as yesterday, on 46th Street between 2nd and 3rd. And it is another AK property, located across the street, almost from the United Nations. It'll be also operated by the Corman family.
Well, it sounds like some remarkable projects, and those are projects that typically, traditionally, ordinary investors, in fact, ordinary accredited investors, the folks with relatively modest net worths among accredited investors, haven't had an opportunity to participate in.
Correct. And we focus now on what it's called, according to the investment bankers and financial advisors, we call them affluent investors. So you have like a pyramid, you could say. You have the affluent investors at the base of the accredited investors. Then you have the high net worth individuals and the ultra high net worth individuals. And we don't democratize it further because essentially, as we were talking before, Title III is precluding me from doing so based on the cap on the offering of $1 million, because the buildings that we have right now are north of $100 million each one of them. So right. Yes, that's where we're focused on. Somebody in any other state has access now to properties that were privy to Mr. Trump and Michael Bloomberg and the likes.
Yeah, it's that is a great way to think about it. We now all have this opportunity to invest alongside you and Donald Trump. Great opportunity, a huge change in America, and it really, I guess what I love most about it is the opportunity that creates for ordinary people to have the same wealth creation tools available to them that the wealthy have had for a long time.
I couldn't agree more, because if you think about it, the value on the return on everybody's dollar is really dependent, on the amount of wealth each one of us have, and that shouldn't be the case. I think that every dollar should be getting the same returns. And with this, you're essentially democratizing access to those returns, because you don't need $100 million behind you to be getting returns north of 15%, which is what you get here in New York on any given day. We are secluded, as affluent investors and non-accredited investors, to a very low yield environment and high levels of volatility. We're invested, as we were saying before, in stocks, bonds, and commodities, and that shouldn't be the case. That's why we're forced to buy residential real estate and creating bubbles like the ones we see in Vegas or in Miami all the time, when we have these stable assets here ready for grasp. So now the key here is that I believe that crowdfunding will evolve into something. Right now, real estate will be the bigger play for sure, particularly commercial real estate. And people should focus, on the quality of the underlying asset. That's really the key. Because I see a ton of other sites, which is great, and I welcome them all, because the industry is big enough for everybody. And you could also take the position that investors are free to choose whatever they like. But there's assets, that I wouldn't touch with a 10-foot pole. So people need to really be very careful as to where they're putting their money.
Yeah. Well, Rodrigo, I really appreciate your taking the time to be with us this afternoon. I appreciate your insights. I congratulate you on your success. Before we conclude, tell people how they can engage. I know there will be people who are watching this who will want to invest in the next deal. Tell them how they do that.
They can visit us at prodigynetwork.com, or they can contact any of our offices in Miami and New York as well, and we'll be happy to help them, understand whether they're suited, as accredited investors to participate for now in crowdfunding in commercial real estate. And as well, they can do, if they're unaccredited, what they can effectively do is participate in a petition that we were going to be launching sometime over the next 60 days to really create awareness for that matter.
Very good. Rodrigo, again, thank you very much, and congratulations on all of your success so far.
Thank you so much, Devin. It's always a pleasure talking to you.
All righty. Thank you. And let's do some good.